All right, good morning, everybody. Thanks for joining us. We're going to give it just a moment as folks are coming into the webinar. So just 1 minute and we will get started. All right, good morning. I think we're looking at the participant list and it looks like most of the folks that are coming on have hopped on. So good morning. I'm Mike Erdman, CEO of the Home Builders Association of Marion and Polk counties here in Salem. I want to thank all of you for joining us for the webinar this morning, brought to you by the Home Builders Associations of Metro Portland and Marion and Polk counties. And I know that we've got members from across the state joining us this morning, which is fantastic. You know, this latest round of PPP funding really opens up financial assistance to a lot of folks that were really hard hit by the pandemic, including associations like ours that were shut out of that first round of funding. So I know many of us have got questions about this funding round and what changes have been made. Of course, our goal as the Home Builders Association is to make all of your businesses more successful. And so today, our aim here is to provide you with the information that you need to determine whether you're eligible for the program, how you'd go about accessing those monies, and what questions you may have about tapping all of this. And so I'm going to turn the webinar over to Dave Nielsen with the HBA of Metro Portland for some introductions of our presenters and partners this morning. Dave?
Thanks, Mike. Appreciate that. And I think just as we're starting, I also want to just kind of acknowledge and recognize today for the national significance it has as we, I think many of us probably witnessed the peaceful transition of power, a new president, new leadership today. And obviously, 2020 was a year full of challenges globally, nationally, and in our state and regions on a variety of levels. And I just want to have a moment just to kind of recognize today for what it was that our democracy kind of working, a peaceful transition of power, and hopefully for many reasons, regardless of whether you stand politically, some hope and optimism for 2021. And with that, this webinar and the funding that's available, I know is going to be a benefit to many of our member companies. And so we're excited to be able to present that to you. I also want to state that with that, we recognize that while our industry and the housing market overall has done pretty well this last year, that doesn't mean that every one of our member companies has. And that's another reason why we wanted to bring this webinar to you. That as we've talked to members, we know, again, many have done very well, but that hasn't been across the board. And so we want to provide this opportunity. But I also wanted to stop and just say on behalf of all the HBAs that are here, both the HBA of Metro Portland, the HBA Marion and Polk counties that are putting this on, but I know that the Builders Association of Southern Oregon and the HBA of K Falls, I think the HBA of Lane County and probably others have some members that are on here as well too. And on behalf of all of us that are on the staff and leadership for those HBAs, I want to thank so many of you who have stepped up and provided support to us during what has been an incredibly difficult time for us. We do not make our living off of selling homes or off the real estate industry in general. Most of us make it off of membership and really off of events, including large scale events that we put on that benefit our members and the public, and those are dramatically affected. So I just want to thank all of you for supporting the HBAs through your membership, through your other support. And that's kind of a perfect segue to introducing John Frankel with Northwest Natural. Northwest Natural is a longtime partner, not just of our HBA, but I know of HBAs across the state and the territories that they serve, and has just been a steadfast partner with us, especially through the pandemic, and is a sponsor of our webinar series, the Connect and Build series that this is a part of. So I'm going to turn it over to John so he can say a quick welcome before I introduce the speakers.
Hello, everybody. On behalf of Northwest Natural, I want to say it is absolutely our pleasure to sponsor the Connect and Build series. We believe it's important to assist in providing vital content such as this PPP funding update to our building industry allies. Welcome and thank you for your partnership.
Thanks. And with that, we're going to get rolling because we don't anticipate this being a long program. I think we've got maybe 15 to 20 minutes of content, and we've got several questions. Many of you submitted in advance when you registered. Thank you for that. And we have others that were submitted as well too. So we are definitely going to have some time for Q&A at the end. And if you didn't get a chance to submit a question or something comes up during the webinar that you have a question about, if it's general in nature, we're going to try and get to it. If it's more specific to your business, we'll pass that on to Marty and Rob, or we'll have their contact information so you could follow up with one of them individually as appropriate if it's of a more individualized question. So with that, I'm going to introduce Marty Golden, and who is the director of the Small Business Administration Office here in the Portland area. And then he'll kind of turn it over to Rob when that comes as well too. But Marty, I'll turn it over to you to start the program.
Thank you. Almost good afternoon, everybody. My name is Marty Golden. I'm the District Director of the Portland District Office of the U.S. Small Business Administration. Many of you may have seen me back in March or April when we did this on the first round. Portland District covers 30 of the 36 counties in Oregon, all except for the eastern 6. And then we pick up Southwest Washington, 4 counties there surrounding the Vancouver metro area. And so what I want to do today is take excerpts of a presentation we have talking about the latest legislation and the new PPP second draw loan and the restarting of the first draw SBA loan. So with that, if we could get the presentation up, thank you. Let me go to the next slide, please, and the next slide after that. So obviously, you know, there is a whole lot of new money that was put into a bill, something like $250 billion of new funding for the PPP loan program. We also had some changes to the economic injury disaster loan or EIDL program, which some of you may have taken advantage of in the past. There was a renewed emphasis on countering some of the criticisms of some underserved communities not being able to access funds as did the broader community. And by the way, the first round, we had something over 5 million loans for about 520 or $30 billion. So it was a very successful program. And actually towards the end of it, we really didn't have a lot of applications. So the first round closed August 8th. And at that point, we had 120 or $30 billion remaining that hadn't even been tapped yet. So, just in case there's people out there, we're restarting the first round again, but the primary focus of this is going to be the second round draw. Okay, next one. So in order to give the underserved community a head start, this time we started with community financial institutions, which include the organizations you see in that little blue box. And that was last Monday, not this Monday, but last Monday that we started that. On Wednesday, those institutions could start on the second draws. On last Friday, we had the ability for banks with under $1 billion of assets to start accessing the portal. And then starting this month, or Tuesday, excuse me, we opened the first and second draw to all lending institutions that want to participate. So in anticipation of the question, what I'll tell you is that we don't know exactly how many banks are going to participate this time. It's their decision as it was last time. But from what I heard yesterday, we've already had 5,500 banks across the country that have participated against, I think, 7,700 that participated throughout the entire first round. And we've already had 60,000 loans approved in just the first few days. So everybody should be able to get in now that wants to get in. One thing that's important to note is that March 31st is the deadline of the program. So whether you're talking about a first round or a second draw loan, the application has to be in by March 31st. And I'll contrast that with the economic injury disaster loan program, which has never stopped. So they've never stopped taking applications, but the deadline has been extended from December 31st, 2020 to December 31st, 2021. So you have the whole year for the EIDL and you have until March 31st for the PPP. So for applicants that didn't receive a PPP prior to August 9th, you can go back in and you can, I shouldn't say go back in, you can go to your lender or a lender and you can ask for that, that loan. There are some additional types of entities that are going to be eligible. I don't think it would refer to you guys, but just so you know, destination marketing organizations can now apply, as well as 501c6s. So there was types of not-for-profits that weren't eligible last time, but they are this time, or they are now, I should say. We're also covering additional expenses. So before, you had to have payroll, rent or mortgage, and then utilities, I think, were the covered expenses. So we're adding on top of that operation expenditures. If you have property damage due to the riots, that can be a qualified expense. Supplier costs, and then any expenditures you did getting ready for servicing customers during the time of COVID can be expenses like that you can add as well. Personal protective equipment, modifications you made to make your spaces safe. So there's more expenses that you can use the money for, although you still need to use at least 60% of it for payroll. You can now select a cover period of anything between 8 and 24 weeks. Last time it was either 8 or 24 weeks. And you can actually potentially request an increase if you had an original PPP loan amount, but didn't get the amount that you were qualified for whatever reason. There's an ability to go back and increase that amount. Again, the deadline is March 31st. Or until congressional appropriations expire. I should throw that in. If we run out of money, we run out of money, and then it's up to Congress to replenish that if they choose to do so. So to answer the question that may come up as to, is the money going to run out? We don't know yet, especially since the first week was really small institutions that put in applications.
Yeah. We
don't have enough of a history right now to say whether it's likely this money is going to run out or not. You know, and it's going to depend on the second draw loans as well. So obviously, which will probably be the lion's share of the money. So these are the institutions that are eligible, as I was talking. I think we can go to the next slide. So now let's talk about the second draw PPP loan. So this is going to be a lot like the first draw with a little bit of a difference. Instead of companies with 500 or less employees, you're going to have 300 or less employees. And then you're also going to have suffered a 25% reduction in gross receipts. If you do, then you're going to be eligible for 2.5 times your average monthly 2019 or 2020 payroll costs, up to $2 million. So you may remember the first time around, the first draw was $10 million, and that's still true if you're going after a first loan. But if this is going to be your second PPP, your max available will be $2 million. Now, if you're in the accommodation and food services sector, which means that if you're filing with an NAICS code of 72, they're going to increase that to 3.5 times your average monthly payroll costs, again, up to $2 million. And this is just showing you that the SBA form you're going to use is the 2483 SD. So I think this is a good place for me to kind of tell you about where you can get information. So as was true the last time, Congress writes these bills, and then there's some people back in DC furiously trying to interpret that and put it in regulations. And those are regulations or guidance is posted as interim final rules. So if you go to the SBA's website, and that's sba.gov/PPP, you're going to find guidance that has been posted. Now you're going to see a lot of guidance there. In fact, quite a lot of guidance. But what's important to know is that we had some postings on January 6th. We had 2 IFRs posted on January the 6th. One was a consolidated IFR that essentially consolidates all the previous IFRs on the first draw loan. So that's going to be your reference guide if you're looking for a first draw IFR loan. And there's a second IFR that was posted that day that refers to a second draw loan. And so there's going to be lots of questions about how you calculate or what, give an example of this or example of that. Unfortunately, there's really no shortcut for looking at those and reading those if you have questions. Because everybody you're going to talk to, whether it's your folks at your trade organization, whether you're talking to me, to Rob Campbell, who you'll be talking to in a minute, or lawyers, accountants, everybody else, they might have some good advice for you depending on having enough experience to have seen situations before. But at the end of the day, they're looking at that guidance as well, and they're drawing interpretations. And so, you know, until we see further guidance on those websites, that's what you have to go off of. And the guidance is basically added to all the time. In fact, there's been a number of things added since January the 6th that I haven't even had a chance to read yet, but I know a few things came out yesterday. So that's where you want to go. And I can't stress that enough, because what we find is there's borrowers who think that there's somebody who's tapped on the shoulder and is declared the guru of all things PPP. It's not true. And if there is somebody like that, there's no way I can get to them or you'll be able to get to them. Really, everybody is going to have to look at the guidance, talk to trusted advisors, and then make your best decision as to the course of action depending on what you're reading. Now, I know that sounds a little bit scary, but I want to encourage everybody to remember that nobody is looking to second guess lenders or borrowers. This isn't a gotcha game. There's been some analysis of large loans, but for the vast majority of people who have smaller loans, nobody's going to hang you up because you did something by mistake. And what I can tell you is anecdotally that I've talked to a couple of lenders, and the question I've asked is, have you guys been turned down for forgiveness on many loans? And the answer is just no, we haven't been turned down at all. Some loans go into review if they're very large, and they can review smaller loans, but for the most part, they don't. But, you know, if you're doing the right things and you do use the money the way you're supposed to, the loan is going to be forgiven. Okay, you can keep moving along. So a couple other things. You have to use the first draw loan for eligible expenses before you can take a second draw loan. So if you've got money outstanding that you haven't used off your first draw, you need to use it before you can get a second loan. Again, no more than 300 employees, and you have to demonstrate a 25% reduction in gross receipts between comparable quarters in 19 and 20. And you can also use your annual numbers too, if you would like. If that, they'll just assume you had a quarter that's been at least 25% reduction if you have a 25% reduction in your annual revenues. Something else that's important to note, for those of you who had first draw PPP and then had your forgiveness reduced by any amount of idle advance money that you received, so that was the $1,000 per employee up to $10,000, and that's no longer going to be true. Additionally, anybody who's got an outstanding loan of $2,000 because that wasn't forgiven, there's going to be a mechanism by which that's going to be taken care of. So that they haven't put out guidance on that yet to the banks, but during this process, those small loans that were remaining as a result of you receiving an idle advance are going to go away. I think there's some information here on taxable income. I think Rob is very well positioned to talk about that. And you can use the expanded forgiveness expenses. If you haven't asked for forgiveness yet on your first draw loan, you can include those expenses. And then there's going to be a forgiveness application. So right now there are 3 applications for forgiveness. There's a long form, a short form, and then a form that's really short that's available for people who had loans of less than $50,000. And there's going to be a new form that's going to be designed that's going to basically do that for all loans under $150,000. Okay, so we're going to be taking questions, and I do want to mention one other thing too. If you did get an idle advance last year or you didn't get one because we ran out of money, there's going to be a mechanism by which you may be eligible to get up to the $10,000 that you might have gotten last time if they'd had more money. So that means if you got an idle advance of $2,000, and if you qualify, you may get another $8,000. And if you applied for an idle loan last year and then was told the money ran out, then again, you'd be eligible for potentially $10,000. Now, there isn't going to be a portal for that, but we will be looking at those situations. So there's a couple things that have to happen there. One is you have to be in a low income area, and the SBA will be checking addresses to determine that. And secondly, if you are in those areas, you're going to be contacted by the SBA, and then you're going to have to demonstrate a 30% reduction in revenue in 2020. And if you qualify into those areas, then there's the potential you'll get up to that $10,000 advance. That's not going to be true going forward. We don't, at this point, have a new idle advance program, although it could be possible that we may start that up later, depending on how much money is left after we top up the individuals who got the idle advance last year. And so then back to this slide, there's a lot of places you can get help. You can go to the SBA district office. You can go to the resource partners, which you're going to be talking to in just a second here. In addition to the SBDCs, we have SCORE chapters as well. And we encourage you to try to take advantage of these programs. And I'll be available to answer questions. So I think that's it for me. And Rob, you can take it from here.
Yeah, thanks, Marty. What a great review. People on the call, my name is Rob Campbell. I am the director of the Small Business Development Center at Clackamas Community College. The SBDC network is 19 SBDC centers around the state, approximately 140 people, work in 43 different locations. And we are partners with SBA and Business Oregon, and we were first responders when this first CARES Act came out. And so we were at about over 90% capacity when the first CARES package came out. So we had to figure out a way to help people get help. And our first priority were our clients, present clients, our past clients, and referrals from all of our partners, which include chambers of commerce, economic development organizations, business alliances, and primarily from SBA and from Business Oregon and from the banks. So I'm happy to report that when the first round came out, we were very successful in getting our clients idle loans and PPP loans, and some of them got both. We have been focusing the last quarter of 2020 on the loan forgiveness piece. And I can't stress enough about what Marty said. The IFRs are the guidance, and there's no one that really knows exactly how to interpret all that stuff. So IFRs are the first source. But we have all the idle loans went directly to SBA. I think people on the call know that, and all the PPPL loans went through approved lenders. And so after the IFRs, it's going to be a lot of the burden's going to be on the lender that made the original PPPL loan. So we've had people that have actually applied for forgiveness and already received their money, even though there was a time period. I think the banks could take up to 60 days to review, and SBA up to 90, but they are being processed a lot quicker than that now. So let's see, something that maybe Marty didn't cover. We have, before the pandemic, we had about 15,000 businesses in Clackamas County, and half of them had less than 5 employees. 2/3 of them had less than 10 employees, and about 80% of them had less than 20 employees. So we had a lot of people that are self-employed, independent contractors, sole proprietorships, single member LLCs, very popular, and they're eligible for for the PPPL loans. They have a maximum of $100,000. So And then we had some clients that they made a calculation that it was better for them when they lost their business, particularly if they were in hospitality and food service, that it would be better for them to go on unemployment. And we helped them with some analysis on that. And so with this new round, I think unemployment, it's an extra $300 a week. It's been extended from 39 weeks to 50. And so smaller companies, sole proprietors and single member LLCs, you might want to look at that. I want to talk a little bit about the gross receipts and the deduction. 2019, if you weren't making money in 2019, something was wrong with you. You had maybe a flaw in your business model, because had the lowest unemployment in the state. We had very affordable financing and money. There was a lot of money available and people were spending that money. And so making this comparison between the reduction of 2019 and 2020, to be eligible, you have to show a reduction within 25%. And like Marty said, it actually can be from quarter to quarter. So let's just say second quarter of 2019, you were doing well. And then all of a sudden the pandemic hit, you were locked down. And then by the second quarter of 2019, you could show that 25% reduction easily. I had one client that within 2 weeks lost $93,000 worth of bookings just in that 2 weeks. So you can do it by quarter or you can do it by the year. So, but the same requirements on the loan package number 2 is the same as number 1. What you got to show 25%, you have to be eligible. You have to be open. Like Marty said, you have to spend, if you had PPPL 1, you have to have spent the money within the time period that's selected. Most people selected the 24 weeks, but you don't have to have forgiveness yet, because that's probably not happened yet. So, or people haven't even filed for forgiveness. I think a lot of the lender partners that we've had, they were very happy that the first round, Marty talked about that the application, the 3508, it used to be, they actually created a form. It's called a 3508S simplified form, which if it's less than $50,000, it makes it much easier to apply. On the second round, that's been moved up to $150,000, and that application has not been prepared yet, but I think the requirements will be similar. And that is going to take the bulk of the forgiveness packages. So if, I don't know whether Marty said this or not, but if you have, since PPPL went through authorized lenders with the SBA, if they are open for PPPL 2, I would recommend that you go back to that lender because they have all of your original paperwork on the first round. And if you're particularly in that NAICS code 72 that Marty talked about, would increase the next PPPL loan from 2.5 times average monthly salary to 3.5, it'll be much easier for you just to make that second application with the lender that you have. Having said that, some of the lenders are not going to participate, and you do not have to go back to the same lender. You can go to others, and there's a listing on the SBA Gov site to do that. Dave, I think that's about what I have, and then I think Marty and I can.
Rob, do you want to talk about the new regulation that gives the ability to deduct the expenses that previously you couldn't deduct?
Oh yeah, and Marty, that is huge. I mean, under the original plan, if you had an idle grant money, let's say you had 2 employees and $2,000, that was going to be deducted from your PPPL loan forgiveness. On top of that, any expenses that you use for your PPPL loan forgiveness application were not going to be deducted. You could not deduct them by IRS rules for your expenses. And we had clients that when you did the analysis, a lot of them were actually faced with a pretty large tax bite if they've got 100% loan forgiveness on the first PPPL round. That's all been changed. I think the 3 biggest things is that idle advances are not included in gross receipts, according to the way I read the IFRs. The forgiveness piece is not included in that gross receipts. And then another program that if you had not applied for PPPL, there was and kept your employees on and kept them and paid them, there's an employee tax credit that was available to you. And it was an either or program. It was either PPPL or you could take the tax credit when you filed your taxes. And now you're eligible for both. So that is a huge change. And they increased under the employee retention tax credit, not deduction credit. It was maximum up to 5,000 employee. In the new program, it's up to $14,000 per employee. So you have to talk to obviously you have to talk to your tax professional to review that. But these are all big changes, and they're all big changes for the benefit of the small business community. So. Yeah.
Well, thank you, Marty and Rob. We do have several questions, and I think these will be really valuable. So for the participants that are on, I think we're going to go about another 15 minutes. We'll try and wrap up here by 12:15. I think we promised to get you out of here about 45 minutes, but we do have some questions. And thank you, because there are several of the questions that you guys already answered relating to, our sole proprietors eligible, where can we get a list of banks? And thank you, Marty, for putting that up on the slide. Obviously, the first response would be to go to any bank you're already doing business with, because they're going to be even more motivated to try and take care of you. But there are lists of other banks. And I know we had in the first round, because there were so many people applying to Oregon banks, I think we actually found a bank that was based in North or South Dakota, which at the time in April or May didn't have hardly any, any impact. And so those banks weren't doing much. And so people were actually able to apply to a bank in a completely different state because it was just, they were able to get more attention. So obviously go with your lenders, but there is a list available that Marty provided. So that's great.
Hey, and Dave, I might add too, this was when that first round came out, they opened it up to the FinTechs. So people like Intuit, if you did your taxes, with TurboTax, Intuit was one. PayPal was another one. So
interesting. Okay.
People don't know that, but I've had clients get particularly the people that you mentioned, like sole proprietors, independent contractors. The maximum on that first round and the second round is $100,000 a year on annual compensation. Well, if you divide that by 12, multiply that times 2.5, I haven't done the math, but it's
about 20 grand.
Yeah, about $20,800 or so. So
yeah. That
for the application for forgiveness form, you would use that 3508S simplified form, because that's less than 50,000, and then have the appropriate supporting documentation that shows what you did.
Well, thank you. I think we've got a few questions here. One of them, just since you were talking about the expenses and the changes, especially with the EIDL and what you can and how that's impacted. Is there anything else just generally that this new round expands in terms of allowed expenses that weren't in the first one? Either one of you want to answer that one?
Yeah, Marty, you covered it pretty well, I thought. You said operational expenses. Typically what that would be like software that you had to buy to help pivot your company to deal with the COVID crisis. Grubhub, stuff like that. So operational expenses, supplier expenses, doesn't apply to too many people, but what that means is that if you signed a contract for supplies and then your business dropped and you still had to make up what you bought, what you were obligated to buy, you could actually deduct those, the difference on those expenses. The big one, as Marty already talked about, is what you had to do to actually conform to, like OSHA, Department Health Authority regulations, CDC requirements. So it'd be sanitation, personal protection equipment, any adjustments that you made to your operation for, let's say, takeout, things like that. Those weren't allowable under the first program, but they're allowed now.
Okay, thank you.
I got dumped off of the Zoom, so I wanted to mention something about the banks. I know you're a little past that, but on the SBA website, you can navigate to a list of the banks that did PPP loans in the country, and it's organized by state.
And so there was over 400 lenders that did loans in Oregon. So if you're looking for folks to talk to, you can go to that list. And the vast majority of those 400 plus were located outside the state. So you can actually see people who did at least one PPP loan.
Yeah, thank you. There's a couple of questions that have come in on the chat feature. I think 3 of them, 2 of them, I think you guys have answered since the questions were put up there. But Patty, thank you for yours. Is there a due date to apply for forgiveness? Actually, I don't know if that one has been. We'll get to the forgiveness in a second, because I know we've got a few questions around forgiveness. There's the date to apply for the loan is March 31st, I think, or until funds run out. Julianne, thank you for your question. It said, are the second round PPP loans also forgivable? Yes, both the first round and the second round are forgivable. I think we talked through that. Talk a little, when the first round of PPPs came out, there's this whole thing about it's to help companies retain their employees over the 2 months that we thought this pandemic would last.
Yeah.
And that's now changed. And so, there's this thing around the payroll calculation. So can you talk a little bit? So it's not based about retaining employees. Now it's about lost income and comparing that from 2019 to 2020. And there's some questions around that. For example, which year do you use? I think the first question, thank you, Mike Arnett. What will determine which year is used for the 2.5 payroll calculation? So is it in 2019, maybe the quarter that you pick? And is that the payroll, or is it that similar quarter in 2020 when maybe you had to make some reductions and had some layoffs or furloughs? And so let's just start with that one, and then I'll roll into a couple others that have to do with how we're kind of accounting for this, especially when people haven't filed their tax returns this year.
Well, what we've recommended, it's from 2019. You want to compare 2019 to 2020, and you could do it either quarterly or by the year.
Well, that's comparing for the 25% loss. Is that also how you use the calculation on what you're eligible for? I think that was what their question was about. Which payroll figure using the 2.5 to get your calculation what you're eligible for?
Yeah, I think, well, for eligibility, there's 2 things. One is a reduction in the number of employees. Number 2, you have to demonstrate a 25% reduction, okay, between 19 and 20. But number 3 is still the same. 1 and 2 are still the same. You still have to spend 60% on payroll. Even though they've expanded the 40%, which you can deduct, you still have to spend 60% on payroll.
So yeah, the amount that you calculate, that's going to be your loan amount, which is 2.5 times your average payroll in 19 or 20, and you need to. There's all sorts of calculations and examples in the regulations that I mentioned, but from memory, you can use average 19 payroll or average 20 payroll, whichever is beneficial to you.
Right.
Okay.
And payroll costs include all payroll costs. So it's compensation, it's benefits, it could be retirement, it could be sick leave, it could be, there's another provision that I didn't mention that didn't really apply. Before, if you had an employee that came down with COVID, got tested for COVID, you were required to pay that person up to 80 hours. That was sunsetted on 12/31. But let's say you just kept paying that person, you can deduct those expenses. Yeah.
Okay.
That doesn't happen very often.
And then some of the questions are around documentation of what your 2020 was, and people are like, well, I haven't filed my 2020 tax returns. I know you've touched on this a little bit, but just for people who are having questions like, how do we document or justify, a small business that maybe just uses QuickBooks or something like that? I mean, what is just some basic level of requirements in terms of how you document that and what's going to be allowed or counted, as opposed to someone just saying, no, I really did.
Yeah, well, that is a great question, and Marty said it best up there. IFRs are the administrative rules, and you follow that. But since PPPL went to lenders, it's what the lenders are actually going to ask you to provide to support the eligibility and forgiveness for the loans. So the people that have actually applied for forgiveness and had their application accepted, Marty said it, when they allowed the simplified form, 3508S, a simplified form, that would apply to all the sole proprietors, independent contractors, and that's less than $50,000. And so your documentation that you want to submit for that, obviously, is what we call third-party records, which could be bank statements. It could be if you've had your, even though you may have not filed your taxes, you've got a P&L and maybe a balance sheet that you've done off of QuickBooks. If you use a payroll company, you can have those payroll records. A lot of people do that now. So when I say third-party documents, it's just like, not you just preparing a spreadsheet showing, well, I did, you know, I spent 60% on payroll and I had 25% loss. You have to have something that would actually demonstrate that. One area that has been an issue on sole proprietor and independent contractors and people that file their Schedule C, by the way, the line that you want to look on 2019 on your Schedule C is line 31. And that's what you use to apply for your original PPPL loan with the bank. And a lot of people, you know, you don't pay yourself a salary, you take a draw. And unfortunately, a lot of people just pay themselves whatever's left over, you know. But we've always recommended that if you had a PPPL loan or an EIDL loan, that you actually put those funds into your business account and you write yourself a check that demonstrates your payroll. A lot of people don't do that. And so that some of that has been kind of a hang up, but you know.
Yeah.
I'd just like to add that there is a memorandum dated June 26, 2020, that is amongst the guidance, all the guidance you're going to see listed when you go to the website. And that goes through any number of calculations for different types of businesses and how you would calculate your loan amount.
Okay.
So I definitely recommend taking a look at that.
We only got a couple minutes left, and I think the last area I wanted to just touch on briefly was on the forgiveness side. I think three main question areas that I have. One is there a final deadline that you have to apply for forgiveness of either your first round or the second round? Second, are people that have applied for forgiveness, is that kind of on hold right now as all these things are being worked through? And then third, are you able, if you got one PPP loan and now you're getting a second one, are you able to do forgiveness for both at the same time, or are those separate processes? So I think those are the three questions I've heard, and
I'll take those, I guess. So the last question is, they're separate processes. You don't have to ask for forgiveness before you take out a second draw, but you have to have spent the money. And the first question was, forgiveness is still going. What's that?
The deadline was the first one.
Yeah, okay. So I'm actually not aware of a deadline for asking for forgiveness, but what I can tell you is that you have 10 months from the end of your covered period, whatever that was, to apply for forgiveness. And if you haven't done it within the 10-month period, you're going to have to go, the bank is going to give you an amortization schedule. And so you'll have to start making payments after 10 months. So you can do that, or you can ask for forgiveness, but that's when you would start having to make payments. And your period, by the way, would be whatever's remaining in either 2 years or 5 years, depending on what the deal was when you did the deal. Because if you remember, initially they were 2 years, and then it went to 5 years, and then there was a period where you could try to talk to your bank into extending it. But so if you have the 2-year deal and you wait 10 months, then you're going to amortize over the following 14 months.
Okay, thank you.
You don't have to wait 10 months. You can do it right away as soon as you get done spending the money.
Yeah, I have clients that they spent all of their money within the allocated time period on payroll. I said, don't wait, go ahead and submit because of the delays. Either way, you know, these loans are going to show up on your balance sheet. So, you know, one's going to be a short, PPPL is going to be a short-term liability, and your EIDL loan is going to be a longer-term liability. But that's okay. It doesn't make any difference as far as.
You know, there is something else to keep in mind there, and that is that if you've got a PPP loan outstanding, often banks won't give you a line of credit because you've got debt. So you probably want to get rid of that as soon as you can.
I agree.
Yeah, great.
Yeah. And, you know, and my philosophy is take the money. If you're eligible for the second round, apply for a PPPL. Now, worst case is if you don't get 100% forgiveness, it only is a 1% loan up to, like Marty says, 2 to 5 years. You know what? You can always pay it back. You know, having this liquidity has been, you know, for people that have as much gray in their beards as I do, well, maybe not as much as Marty. You know, we've been through, you know, 9/11, you know, we've been through the financial crisis of 2008. I worked for the gas company, you know, back in the early 80s, and 2008 was bad, but it was nothing like the early 80s. I mean, interest rates were 18% and unemployment was double digits. And I had 23 large builders, and 21 of them went broke, and they'd all been in business over 20 years. So having this liquidity and to keep people employed and having this unemployment compensation is really an unbelievable thing. I have never seen it so good. And I know a lot of people are hurting, and one of the reasons that they've increased the 2.5 to 3.5 on the next round for the NAICS Code 72 is for the people that are really, really hurting, that were actually shut down and they couldn't do any business. And so, but having this money and liquidity, and editorially, I think the Treasury and Congress, they learned a lesson when the government was shut down a couple of years ago. 800 and some thousand federal employees were only 3 paychecks, 3 pay periods away from total disaster on their mortgages. And they didn't even have $400 for an emergency car breakdown expense. So keeping this money in the system to help people through this time period until the vaccines kick in and maybe some warmer weather, and, you know, I mean, this is remarkable. I've never seen it like this before, and it's a blessing. I mean,
it is historic in many ways. I saw one last question that just came in. I think we talked about this, but we might have not covered it. Eric, thank you for it. Is there a cap on annual salary for biz owners like there was for the first? I think it was at 100,000 was the max, but is that still? It's
100,000, and then when you apply for forgiveness, you just use 3508S form.
Okay. Okay. Mike, I didn't know if you had anything else, but I think we're about done here. And I just wanted to thank everyone. I know you do as well too. And John Frankel, thank you, and Northwest Natural for your support, not just of this program, but for our HBA, the building industry in general, many HBAs around the region. And just thank you for that. And Marty and Rob, thank you so much for what you've shared with us and taking your time. I know you've been doing these dog and pony shows a lot. And are probably going to do some kind of road show together at some point, and maybe we'll see you in Vegas down the road. But
Dave, I'd like to mention that we have a website for our network statewide. So regardless of where you are around the state of Oregon, if you go to www.oregonsbdc.org, you can go under COVID, and there's tons of resources on there. And of course, all the information to SBA.gov and state of Oregon. And then if you're in the food service industry, we have a thing called ORCA. We have a partnership with the Oregon Restaurant Association, and we have a team of people that are actually helping people that are in food service and the hospitality stuff. So
thanks,
all that without cost. So.
Yeah, and we just put that in the chat feature. So if anyone didn't get that when Rob said it, you can look in the chat feature and it's there. Mike, anything else in closing?
No, I just mentioned that this program moves fairly quickly. Just a side note, while we're on this call today, I got an email from our bank, and the PPP application we put in was approved this morning. So,
oh my God,
timing. That is great.
We love it. So,
tell a friend. Tell a friend.
telling you all here, absolutely. So,
no, that's fantastic.
It's awesome news. Way to end it on a really positive note.
That's great.
Thank you again, everyone, and thanks for those that joined us. I hope this was very helpful. If you do have any other questions or anything, you can just shoot us an email at our office. You can shoot me one, daven@hbapdx.org, or if you're a member in one of the other HBAs, just shoot your HBA an email, and they'll be happy to try and connect you with Rob or Marty, or if we have other resources as well too. But thanks everyone for being on, and enjoy the rest of your day.
All right, great.
Thank you very much. Bye, everybody.
Thank you.
Thanks all.